Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Monday, October 17th, 2022. Before we jump into the charts, once again, just want to encourage you to please click like each and every time you watch the daily Tesla report or any other content that Wicked Stocks puts out on its YouTube channel. Please subscribe if you haven't already. You'll be notified each and every time new content has been uploaded. We upload stuff every single day from Wicked Stocks. And, share the content with friends and colleagues if you would. Anyway, let's take a look at the chart here. I will show the big picture. This is a weekly chart. And I'd mentioned how the 206.85 low from last May could contain sort of double bottom selling pressures, whereby, after testing it, and we did earlier in the week, we came off it just a bit on Friday, but gave it all back actually on Friday. We closed just below this level on Friday for the week itself. Up to that point, had been anticipating the possibility of a rally back into the 260s, 270s by the end of November or sooner, but that doesn't seem to be what's playing out. Obviously, having closed below the 206.85 level, and you can see in the support resistance, I've reduced it to a 2-star level only. In other words, able to contain 2 to 3 day highs or lows. And what I mean by that is with the present volatility we have, holding below continued daily settlements below 206.85. Our next target, which remains in effect below 206.85, is in reach within the week. Over the next few days, perhaps, with this kind of volatility. And it's really 185.29 is a channel bottom that held on the weekly chart back in May. We did a Tesla video on wickedstocks.com for our premium members back in April that anticipated that channel bottom as a target and that it could contain quarterly selling pressures, and that is what played out, and we are back at it again. 185.29, actually 186.09 on the daily chart, I'll show that in a moment, is really the start of a range down to 177.18. Now 177.18 is sort of a projection of the same channel structure, but off the slippage low below it that occurred in May. And I've seen this happen many times where you really have sort of a new zone of support, not just the original channel itself, which we never settled below on a weekly basis, but also an extension of the same rate of descent against the actual extreme low that pierced that channel bottom in May, but just momentarily. So that is at 177.18. It is a range of support on the weekly chart. I'll show the same on the daily chart, a slightly different set of numbers between 177.18 and 185.29 that is dropping on a steady basis, and over the next few weeks will actually coincide with 172.77, which is a 5/8 downside Fibonacci AB. A doesn't look like much of anything on this chart anymore, but at the time, that was the March 2020 COVID low, it was the most meaningful sell-off that Tesla had incurred in its short history as a stock. And so in with regard to the broader market, the NASDAQ, the S&P, that was a significant low, and just measuring a 5/8 back, A, B being the November all-time high, 172.77 is a respectable 5/8 Fibonacci, and you can see if you go back in time, it actually pierces a gap area, if you will. Not really a gap, but you had a high from 2020 and a pullback low in 2021 that sort of bracket that 172.77. So, the 172.77 level is significant. And what's more is over the next few weeks, it will coincide with the equally significant descending channel bottom structure. This area is expected over the next several weeks, and with the present volatility, perhaps this week. 206.85 our ceiling. On the way down today, 197 even can contain intraday selling pressures, possibly through the balance of the day. 204.16 is nothing more than Friday's low. 202.60 is a former high on the daily chart. 197 even is also a former meaningful high on the daily chart. I'm not even showing it because we have to go back to 2021 to show those levels. In any event, if we close today below 197 even, we should tomorrow actually test 186.09. Now 186.09, this is the same chart but on the daily chart. This is the same formation but shown on the daily chart. 186.09 to 177.69. And you can see how holding below 206.85 with present volatility, we may, over the next couple of days, test this 186.09, which is why I've reduced 206.85 from a 4-star level, potentially able to contain selling into November, which obviously hasn't happened, to a 2-star resistance area, able to contain buying into later week, and below which this area remains an objective, 177.69 to 186.09, able to absorb selling through the rest of the year. There's really not much to hang your hat on in terms of downside support levels that I can see until for the day itself, 197 even, certainly in reach, where we could bottom out possibly through the rest of the day. If we close below 197 even, 186.09 expected tomorrow. Now, there is the potential that we could test 186.09 today if we break, especially open today, below 197 even. Something else I wanted to show, and that is the fact that the NASDAQ 100, actually shown here as the triple Q, I do a daily triple Q report through wickedstocks.com, part of our premium services, did test long-term Fibonacci levels last week. I think I've shown this before, and you can see here, A is the 2002 post.com bubble low. That is a significant low for this instrument for the NASDAQ 100 against B, the November all-time high. You also have C, the COVID low, from March of 2020. And there's two significant Fibonacci's that line up well here. We did test it last week. We closed just above it. And so there is a case to be made for the NASDAQ possibly finding a low here, although it's a little early for that. At this point in time, and I don't think you'd argue much against it, if I'm buying the NASDAQ, it probably should be on strength rather than just merely bottom picking what is continued weakness here in this instrument. So I'm going to just jump back to the Tesla report here and show for the day itself, if we happen to push or open above 206.85, 220.08 is in reach. And that is nothing more than the steeply descending channel top that I'd mentioned last week. I think it was around 225 and change. I forget the number exactly, but it's a 2-star resistance on Friday. It held nicely. We fell off of it. We tested it early in the morning. We opened below it. We pushed through it by about a point, little less than a point, and then we gave it all back and then some as the day wore on. But I've reduced it only to a minor intraday resistance level. Now, it may well contain daily buying pressures, but I think right now, in terms of our upward pivot point through the rest of the week and actually through the rest of October, it would come with a settlement today, and this is the level I want to show you, above 228.35. This is a different descending channel structure that takes into a softer angle of lows that you can see here in early October. It also coincides well with this former trend line. 228.35 is our 2-star resistance. I don't expect to see that today, but if we do push above that 220.08 channel top that I showed in the last slide, we might actually test 228.35 on an intraday basis, where we could top out into later week, from there fall back to 206.85 or lower as the week continues. And I'll go out on a limb and say that if we do close today above 228.35, which is highly unlikely, but if we do, 246.37 expected within several days, and over the next several weeks, this market can rally its way back into the 260s midterm resistance, 264.78 to 269.39, if tested over the next couple, 2-3 weeks, can contain buying through November, and from there we could fall off through November. But right now, we are heavy below 206.85, expecting 197 even today, the 177.69 to 186.09 area over the next 2 to 3 weeks, possibly within 2 to 3 days. Inversely, pushing or opening today above 206.85 will keep 220.08 in reach, where we can top out on an intraday, possibly daily basis. If we push through 220.08, expect 228.35 on an intraday basis, where we could top out into the middle, later part of the week, and is our upward pivot point, not only through the rest of the week, but through the rest of October. Closing above 228.35, I think we've got a good October low, and we should make our way back into the mid to upper 260s within a couple of weeks of doing so. And I think that is really all that needs to be said for Monday's Daily Tesla Report. We'll be back tomorrow with Tuesdays. Please click like and subscribe. Talk soon.